Thanks. Hi, Warriors. Kind of a quiet session so far. I've been highlighting this 103.80 level in the Dixie, and we weren't able to, even though we took it out here, we didn't close underneath it. This is a 2-hour chart. And then we pulled back a higher low here, flirting with 103.80. So you still have to wait for a close. Keep in mind on Thursday, we have the PCE. If it's a hot number, that could give the market a bit of a boost. I'm starting to shift from thinking that, we're going to get 105.80 to maybe we just get a rally back towards 104.25. And, this type of decline is uh, looking like that 105 call, which I made. I'll toot my own horn back in January. Uh, yeah, January 105, almost got there. So we'll see what happens. The PCE is a big deal, but still don't have a close under there. And, I want to see two closes under it now, basically because of Thursday, in case we get a hot number, because we are getting a little change in the yield picture. Just want to go to the yields. They did put in a move on Friday that was pretty significant. We diverged up here and yields dropped from 435 towards 420. Of course, just like 103.80 is important in the Dixie, 420 is very important. 418 for 10-year yields. We start taking that out and we're going to see yields begin to fall again. So if we get a hot number and yields rally one more time, which I think is a pretty good possibility, we could call this drive one, we could call it drive two. But if we get another rally above 435, we're going to diverge again. And that should take the TLT down one more time under 92 towards 91 or 90. So here's the look on the TLT. It's called just about 10 higher. We still haven't reached 61.8. That would be here, 91. So there could be one more blip up in rates before the bond market and 10-year yields begin to decline in rates, which should commence a decline in the dollar at the same time. So that's something I'm looking at. It's important at all times in the market to have good trade selection. Okay. And how do you go about it? So EG is one way I go about it when defining what I want to do, what my preferred long and short is between the euro and the pound. And I was a little early at 85.50 last week. But we did put in a nice little bottom and reverse last week. And so far, we're just pulling back here. And I think there could be another rally, even if this isn't the low, which is really going to make cable the preferred short if you want to play the long side of the dollar. But then you break it down even further, and cable's still up 23, euro's up 28. And then you look at Aussie, which I got short last week. It's a weak sister. So if you really want to play for another pop up in the dollar, it's going to be Aussie. Metals are weaker. I'll get to that in a minute. But Aussie still could break back down towards this 64 level. Maybe it's going to have something to do with China. But it's underperforming. So you want to sell the underperformer, buy the strong performer. And right now, because of EG, Euro's a stronger performer. Now, if the Euro takes out 109, that'll give you your 103.80 close if we get back under 109. It's a guess which way it's going to go, especially with the big number on Thursday. But over 109, you can't be short the euro again because that would measure up to about 111. Still looking at USD MEX, which is still trying to put in a right shoulder here. It still hasn't done anything wrong. It's a little weaker today, but we're heading up towards major resistance here in USD MEX. Let me just tag this high, and we're not that far away from a breakout. 1720 would take it out of here. And then 1740 is a huge level in USD MEX. So still long, wrong under 17, which it held again last week when the dollar was getting hammered. Like I said in last week's video, US dollar MEX put in a higher high, another relative strength play, while the dollar put in a lower low. So still looks okay in USD MEX. And US dollar yen, I talked about that the most likely scenario for US dollar yen was higher, that we just moved sideways in this triangle. We've had a breakout. Big number in Japan later today. Their inflation numbers are out. I think that, I'd watch it around that 151 level, see what happens, but there could be a big mover in the yen. We are diverging in US dollar yen. Well, you can't say it's a divergence yet because we still haven't taken out this high, but it looks like it won't confirm unless it's an outsized move to the upside. So I thought we might have been getting a turn, and gold put in a nice day on Friday, but it's given it all up, waiting for gold to come up. So the decline in the metals is still underway with silver leading the way. And, I just want to make a point because we did have some decent action in the gold shares on Friday that's given it all back here today. So I just want to point out that I've been negative the miners since last year and said you have to wait for this year for a low. I've been talking about 25 as being a possible low. That's a big picture here. And we're down over 20% from here. So I guess the only thing I could have done better, but I have a long-term bullish bias, was not just to avoid, but to have been short the miners, as it looks like we're going to head towards this very important test down here in the low 24 area. You'll have a triangle and also some fib numbers coming in there that are gone now, but they come in around 2460 or so. So we're about a point away from that happening. Also, I was talking about 30 in Newmont for a while. In fact, all the way back up here. So, I had a comment on one of my videos that someone wished they had found our channel before he bought miners, and now he's a long-term investor. So I want to touch on a couple of equity situations here. And, we've had this blow off. It continues in the S&Ps. We had a little pullback on Friday, but I said if NVIDIA's earnings were good, I would use strength to add to shorts to stocks that are not making new highs, specifically Apple. And with that blow off rally that we had in the market, all we could generate from this 180 area was a 4-point pop. Look how much weaker the rallies get off 180. That was a nice rally. This was a weaker rally, and this was really anemic. And why is 180 important? Well, back here it was supporting, the 200-day was supporting Apple, and we took it out on earnings. But what I see as important now is the weekly 50-week. So here it comes. Should come up here in a minute. Where's that 50-week? There it is. See the green line right there? It's a 50-week moving average right at 180 again. So breakdowns under 180, I think we'll target 160. Maybe we even go towards under 150, towards a 200 week. Just like Jim Cramer says, there's always a bull market somewhere. I contend that there's always a bear market somewhere. You could look at EV stocks. A lot of stocks have underperformed. Uranium stocks have been correcting pretty severely in the last week or so. And I just want to take a look at Microsoft, which was something else I started paying attention to. It's not up much today, but if you look at Microsoft here on, let's bring up the daily. You have the potential for a right shoulder of a head and shoulders top. And then even if you get a continuation move to new highs, we will diverge and it would be a 1, 2, 3 drive. You can't call it a head and shoulders top. You could, you know, surmise that it could be, but it's not until we take out 397. So there's another chip in the armor of the Mag 7, Apple, and now Microsoft, which I think is the largest market cap in the market. So keep an eye on this. This could be a canary in the coal mine. And I think that's about all I wanted. Oh, the gold silver ratio still on a daily basis, even though we've rallied today, you know, we broke down, now we broke up, back up to the upside. It's still a lower high so far. So we'll see how these things end up. Let's take a look at, I wanted to show one silver miner, which had a pretty good day. And it's this one, First Majestic. So look at I think this was an earnings day. Yes, it was. And they took it down on earnings, right? And put in a really nice reversal day with divergence. And even though silver is getting killed, it's down 10 cents, but quite a bit off the low of the move, which is 418. So now I believe we're at the stage, and I have a little of this. I also have a little of this. Okay, because it's reached exhaustion. But I know I'm early and hope I'm early so that I can add at appropriate levels. But what we have here in the golds, what you want to start seeing is what AG did. Silver getting hammered and the shares beginning to hold up instead of the metals being higher and the shares selling off in the face of strong physical markets. So now start looking for the inverse action, that when we have weakness in the market, and you know, we could still have plenty of weakness in silver. You know, a lot of people, and I thought we could get to 2120. You know, maybe it's going to be March. Here's the line where it comes in, right around 2120. There's a triangle line there. So, you know, we're still over $1 away. And it would be very bullish if silver got all the way down there and First Majestic did not make a new low, and that miners begin to hold up better than the metal. And gold, with its pretty good down day today, perhaps now we're going to make this move down towards this 1950 level. But it's possible that a lot has already been discounted in the miners. So it's not like I'm buying AG from $7 and riding it down like a majority of miner bulls have done. We're buying things on sale, okay? Not they're on sale. They still may get cheaper, but they're on sale compared to where they were just even, you know, back at the end of December when I said wait, that the major cycle for miners to bottom was not 2023. It was going to happen in 2024. And I think that we complete it within a month, going into the vernal equinox and the beginning of spring. That's when I think we complete that. So keep an eye on how the miners respond to precious metal weakness. Maybe gold still has 1950 in it. Silver has 2120 in it. And we'll see what the dollar could do this week. Aussie looks pretty weak to me. It's down 20 now. I wouldn't, that's the only one I'm short, and we're having trouble here at this 80 level. So the big wild card is Thursday for a hot print for both the dollar at 103.80 and the 10-year at 420. So big week for yields and the dollar, and always a big week for NVIDIA. It's just for kicks. Take a look at it. Oh my God, it's like having a down day in NVIDIA because it's only up 6. So unless NVIDIA's up $20, $30 a day, and look at this. I know it's over 70, but you know what? That's pretty glaring divergence in NVIDIA. I'm not saying short it because you guys know my style is to short things that are the weakness, but let's see what the 4-hour looks like here. Come on, RSI. Uh, there's a little divergence, even with this big blow-off move that we had into earnings. We're certainly well below this RSI reading. We're below this RSI reading. So we'll see. If NVIDIA caves, AI caves, the things that are weak will get weaker. So remember, don't just count your pips, count your blessings. And I'll see you in the room. And we have a special guest. It makes my year every year to talk to the author of the Market Wizard series, Jack Schwager. It's going to be on Thursday at 1 p.m. I'm going to ask Jack where he's finding wizards nowadays, what his new projects are. And last time Jack was on a year ago, he was constructive, the market. And he doesn't consider himself a wizard, but what a great call. So we'll be talking to Jack on Thursday. Make sure you're here, bring your questions, and I'll ask Jack what you're interested in. So everyone have a great day. I'll be back tomorrow with Mike at our 11 a.m. EST spot. And good hunting today. Adios.